Let's also talk about this post-2016 rally. The risk rally is at least fading. Real estate investment trusts are where the opportunity is now, says our next guest, who predicts they're going to outperform our markets. Randy Anderson, the chief economist at Griffin Capital Company. Let's get right into REITs, real estate investment trusts. You like them? Should we?
I like them. I mean, going back to February the 8th, the real estate market sold off pretty hard. It sold off because people were still in risk-on mode. They were worried that the Fed was going to be overly aggressive and that rates were going to run through the roof. But since February the 8th, REITs have ran over 16.5%. They've outperformed the S&P 500 by over 500 basis points. And it's just not about the returns. It's that we like what we see on the ground. Occupancy rates are strong. Vacancy rates are low. So we're seeing good, strong fundamentals and strong NOI growth.
Any names that you like?
Well, we don't really go to names, but we certainly do like some sectors. A lot of the REIT market is undervalued, trading about 2% below net asset value. But you got some really strong companies in the retail sector trading double digits below net asset value. You've got the office sector trading at double digits below net asset value, and we also like industrial. Even though industrial is trading at a slight premium,
right,
you have to say, you know what, that sector's on fire. A lot of the Amazon effect and next day delivery. So those are looking good.
Are you worried though about a potential recession? Are you worried about a slowdown in the economy? That would certainly hurt REITs.
Well, a slowdown in the economy is going to hurt all asset classes to some degree. So you really have to look at what's going on fundamentally. When I look at the markets across the board, I say, listen, I think GDP myself is going to slow down to 1.5% on average in 19 and 20. We don't see a full recession, but a slowdown. And we see that, you know, the regular stock market can't handle the PE ratios in which they're trading in. REITs have been sort of overlooked. We haven't seen really any NAV growth in 2 years, even though the values on the ground have really moved and picked back up. So on a relative basis, we see a lot of value in the real estate sector.
I've only got about 10 seconds, but what are you worried about right now?
Sure. Well, we worry about everything. We worry about protecting the downside, but mostly it's all about income growth. We're not going to see multiple expansions, whether it's in the S&P or whether it's in the REIT market. We're looking at companies where they're owning properties that can generate solid, strong earnings. It's a rifle shot, not not looking for a shotgun approach today.
There you go, Randy Anderson. Thank you very much.